I'm thinking about buying a single family home as an investment property, but I want to know if the numbers make sense. So I'm here with Alex of Dwell Management Group, who has run a report for me to show me some of the numbers. Let's talk with Alex.
Hey Jordan, thanks for coming in.
Yeah.
So we've got a property that's actively on the MLS, 427 Elton Hills Drive Northwest. I ran this quick report just to kind of show us what the numbers might look like as an investment property. So we've got a monthly income of $2,000 a month, and then your monthly expenses, including your mortgage, taxes, insurance, management fees, you're looking right around $1,700 a month, so your monthly cash flow should be right at about $300. Your cash on cash return, which is in this market averages about 5 to 10%, is about 7.3%. This particular property has completely been gone through, new flooring. Everything's been painted, new electrical. The heating system and AC system have been updated recently. So the property is really turnkey.
Wow. So that's a really good return for a turnkey property.
It is, yep, for a turnkey property, this one's about as good as you're gonna find in town. Purchase price is at $240. To get into the numbers, your closing costs about $3,000. And then your estimated repair costs about $1,000. So your total investment's going to be at about $244. The down payment needed is going to be 20%. So you're looking at about $48,000 for a down payment. Numbers are calculated based off of a 27-year 4.25% interest rate, which for investment is very low right now. So if you're looking to get in the market now is a pretty good time as far as interest rates are concerned.
So Alex, this looks like a great property and the numbers all make sense.
Yeah.
How do I know if this is the right house for me as an investor?
What we can do is we can look at kind of a worst case scenario. So people like to use this 50% rule, cash flow. About half of your monthly income you can expect to be expenses, and then including your monthly payment and interest. Worst case scenario, it's going to about break even for you.
And that's
so that all depends on your risk portfolio, whatever you feel comfortable with as an investor. And then if you look at the analysis over time, if you go to sell it, you're looking at year one, you're going to lose money because of the amount you had to put in it. Year two, though, you're looking at kind of breaking even. Then as you go down the numbers, year 10, you should get about $100,000 on your return as long as these numbers hold true. And then by year 30, you're looking at about a $400,000 gain.
And that includes the equity, property value, all that stuff together?
Yep.
Wow.
And these are pretty low estimates with only a 1% increase. And as you know, it's been averaging about 2 to 3% increase a year.
Yep.
Hey, if you're in the Rochester market and looking to invest, I'd love to run some of these numbers on a home with you. Just hit the message below and we'll get in touch.